Hi, and welcome to the Midday Market Update for February 4th, 2021. My name is Kevin Hill, as always, here with Michael Vincent.
Hey, good afternoon, everybody. Hey, good afternoon, Mr. Hill.
Good afternoon to you, too,
Hey, another
sir.
wonderful day. Interactive show, as always, had some really good participation on Tuesday, right? We got another really good show today. I think we'll get some good comments on. So on LinkedIn, FreightWaves LinkedIn and Facebook channels. So get your comments and questions in, and we'll get them addressed, and we'll get to them as best we possibly can today. But really good show today. We got the full cast of characters back again today, don't we, Kevin?
We do. We have Andrew Cox on the news, and then we have Zach Strickland, our Director of Freight Market Intelligence, coming in to talk about the freight markets. Anthony Smith, our lead economist, talking about the economics. Initial jobless claims are coming out. And we have a very special guest joining us, Anne Reinke. She's the president and CEO of the TIA, Transportation and Intermediaries Association. I think she came in mid-October, so
yeah, October.
Relatively new, getting settled in there.
Right.
So we'll talk to her about that. And then our good friend Jared Flynn from bulkloads.com to talk about ags and commodity dry bulk hauling, seeing what the market is for that.
Yeah, absolutely.
So, yeah, it's going to be a great show.
It certainly is. It certainly is. We'll check on with him, see what's going on with the grain market, I guess. Right?
Yeah, we will check out the grain markets, and then we'll have the weather, of course, with
Yeah.
Nick Austin at the mid and end of the show. But let's get to the headlines of the day with Andrew Cox. What do we have first?
First one is on air cargo and passenger. The two businesses are inextricably linked, but they don't share the same path to recovery from this pandemic. Shipment volumes have nearly doubled, have nearly recovered from their 2019 levels, and are expected to grow by double digits this year, while outbreaks of the new coronavirus strains and more government travel restrictions dampen expectations that passenger travel can even get to 50% of the 2019 level. Although the cargo and passengers airlines both experienced the worst years on record in 2020, it wasn't exactly evenly distributed. Air cargo volumes improved significantly from the spring bottom when supply and demand shocked by the coronavirus put a brake on international trade. For the year, cargo ton kilometers fell just over 10%, whereas passenger traffic fell by 2/3, according to the AITA, comparing to 2019 numbers. By December, air cargo traffic nearly reached 2019 parity, contracting just a mere 50 basis points. This compares to a 70% downturn in passenger demand, with international air travel 85% below the prior year. The IATA is estimating passenger traffic to grow about 50% this year, which is strong, but that will roughly total to about 50% of the 2019 total. There's a lot of strong demand for air travel. As I told you guys the other day on Tuesday, there's some Jefferies research that says 71% of people plan to travel as much this year as they did in 2019. So there is a lot of pent-up demand to get out and travel. But a lot of this is dependent on the vaccine rollout and how quickly herd immunity can be achieved. Passenger networks have a big impact on air cargo. More than 50% of global air cargo capacity is normally carried in the underbelly of passenger planes. Freighter operators did see this and added dozens of aircraft and extra flights, resulting in about a 24% increase in available space in December for air cargo. But with about 30% of the global passenger fleet still in storage, there's still about an 18% deficit in the air cargo capacity needed. That's a big improvement from the 40% disparity in late March, but we're still a long way to go. The air cargo capacity is still quite tight.
Yeah, it certainly is, and it'll be interesting to see how this goes through. As mentioned in the article, Andrew, is how the vaccine rolls out and we reach herd immunity. But then it's also, and it appears to me that people are more and more confident in it, right? And I think I saw some things where people the percentage of people saying that they will get the vaccine when it's available is going up and up as they see the positive results so far. So that's all good news and for the airline industry as well.
It is. I checked the TSA passenger numbers just a few, maybe yesterday or the day before, and it's kind of come down a little bit. It's trending up to around 40, busting the 40%, and now it's back down to about 30 to 33%. Good days 35%. So still need vaccines out there to
the good news.
bump up that
The
up.
good news from the vaccines and the hospitalizations going down are being tempered a little bit when you see, like yesterday, 4,000 deaths. which is quite high.
It is.
But you see new cases and hospitalization going down, which is great. So we should see all that start to come down. And when everything's coming down, I think you start to see some really good traction.
Anyway. Yeah, I agree. Let's go to domestic truckload and freight brokerages with Echo Global Logistics.
Yeah, we've got some earnings results from Chicago-based Echo Global Logistics. They reported yesterday after market close. JP Hampstead was on the beat on this one. Echo posted EPS of 41 cents per share. That beat street estimates pretty handily. Echo's non-GAAP fully diluted EPS came in at 56 cents per share, which was up a striking 115% year over year. Top line revenue came in also very strong, up 42% year over year to just over $750 million in Q4. And this wasn't all from the extraordinarily upward pressure that we've seen on truckload rates and the freight markets that have experienced throughout 2020. Echo also beat on volume. They outperformed on volume. Truckload revenue increased 56% on nearly 20% higher volume, while the LTL revenue grew 16% on about 13% higher volume. What's especially notable about these volume growth is that Echo achieved it without really growing headcount at all. They were able to gain $60 million in revenue, while the number of salesmen stayed pretty much the same as it did in Q4 2019. The Echo's cost of purchased transportation rose faster than its top line revenue, which did compress margins, but narrowed margins are typical in this part of the freight cycle where trucking capacity is scarce and there's a lot of freight to be moved. Echo's adjusted gross profit margin, often called the net margin in brokerages, it slid down from 16.9 to 15.2 year over year, but still fairly strong and a good quarter for Echo.
Yeah, strong environment for air cargo, for logistics in general. So Rhonda says, checking in with FreightWaves time. Jake McLeod's on here as well, and Bonnie Scott, greetings from the Big D, Dallas. So those are our LinkedIn viewers, or some of those in content or the comments right now. What's our next headline, Andrew?
Got some more earnings from you, this time from LTL powerhouse Old Dominion. They posted a record fourth quarter operating ratio in Q4 with solid increases to both revenue and operating income. ODFL's fourth quarter operating ratio came in at 76.3. That's the highest in any Q4 on record. That's a significant improvement from the 81.3 posted in the last 3 months of 2019. This helped contribute to an annual operating ratio of 77.4 for the company, which is also a big improvement over 2019's 80.1. Revenue per hundredweight, or yield, is the most significant benchmark for the LTL industry, and ODFL posted, again, growth in yield as well, up 4% net of fuel. Total revenues for the company rose 6.4% year over year, but operating income soared nearly $70 million. As a result, net income grew 32% year over year. Most impressive from ODFL is that they were actually able to grow revenue, again, similar to Echo. They were able to grow revenue $60 million while keeping wages and salaries nearly identical. Sequentially, ODFL turned a weaker performance than they did in the third quarter when the company posted its record OR for the entire history of the company at 74.5. And revenue per hundredweight in Q3 was up about $2 over where it was in Q4. But Deutsche Bank analyst Amit Mehrotra believes that the deterioration in profitability was far less than management had projected and is normally much bigger from a Q3 to Q4. So all in all, another impressive quarter for this LTL machine at ODFL.
They are a machine, aren't they?
Yeah, I was going to say that's a perfect description. They're a revenue producing. I mean, it's really no surprise. It's an incredible operation, and it really shows how well they do. Because if you remember talking about the difficulties with LTL early on in the pandemic, with the sudden shift in the product mix, in the class mix that the LTL people were, and on the lanes as well, can just destroy. Wreak havoc on revenue and profitability, your OR, that the revenue per hundredweight managed through it tremendously and really has been it's something to watch. It really is. 74. Unbelievable.
It definitely is. Another heavyweight that had breaking news yesterday was Amazon, where Jeff Bezos will be stepping down as a CEO. And I think that news and Amazon in general being a powerhouse made it into your analysis on point of sale as well, right, Andrew?
That's right, Kevin. Today's point of sale will come out here just after this, probably about 1 or 1:30. I wrote about Amazon And I said that arguably more so than any other retailer, Amazon will leave the pandemic stronger than it entered. There's a lot to unpack in the absolute beastly fourth quarter and full year numbers for Amazon, but they're overwhelmingly positive. From a top-line perspective, Amazon destroyed analyst expectations, raked in $125 billion in revenue. This is the first time they've ever notched the $100 billion mark. They earned just over $14 per share in earnings. Amazon's blockbuster fourth quarter results were driven in part by what the company called a record-breaking holiday season, during which it delivered more than 1 billion packages to customers worldwide. This continued accelerated e-commerce demand and a record, also the pandemic-delayed Prime Day contributed to the record fourth quarter. Throughout the year, we saw a consumer flight to reliability. This was particularly evident late in the quarter and late in December when retailers and transportation providers were warning of delays. That just benefited Amazon even more. In fact, according to the Bank of America consumer spending data, Amazon actually gained market share in Q4. In December, when online e-commerce slowed down from its torrid pace that was seen in Q3, Amazon kept growing. But the growth did not come without costs. While Amazon's unit growth, the amount of things they sold, accelerated slightly up to 47% year over year, its transportation costs surged 67% to $21.5 billion. Its total shipping costs, which incorporates the sortation, delivery centers, and transportation costs, was up 61% to over $60 billion. In 2020, Amazon grew a lot. Not only did the company add 500,000 employees, 175,000 of which came just in Q4 alone, but the company spent roughly $44 billion to expand its fulfillment and transportation network. Amazon expanded its fulfillment and logistics square footage by 50%. They were already one of the biggest in the industry, grew that by 50%. And also what's important here is that more than half of that incremental space that they added went towards the Amazon Logistics division. This is the first time that the majority of incremental square footage has been added to the logistics division. You pair this with the remarkable growth that Amazon saw from third-party sellers, you can see a shift in strategy emerging at Amazon. For the first time since Amazon began allowing third parties to sell on their platform 20 years ago, third parties made up a majority of total goods sold, made up 55% in 2020. And additionally, for the first time, Amazon finished the year fulfilling and handling more than 50% of all orders through its proprietary logistics division, Amazon Logistics. So why do I think Amazon is even stronger now than it was to begin the pandemic? It's not only because they were able to gain market share, but because these investments are not just Band-Aids or floats to get them past the pandemic. These COVID-induced investments will translate into more robust one-day and next-day delivery post-pandemic. The executives emphasized this on the earnings call, that these investments are going to translate into long-term projects, not just what's going on here. And the loyalty from customers that were seen was on full display this holiday season. Late in the holiday season, when customers worried, they turned to Amazon. Kevin.
Thank you very much, Andrew. And if you're not subscribed, where do you go really quickly to subscribe to Point of Sale?
Yeah, you can go to freightwaves.com/POS to sign up. You get retail, consumer, and freight insights to your inbox twice weekly, Mondays and Thursdays.
Thank you again, Andrew. Kelly Mansfield, hello from Michigan. I guess it's cold up in Michigan.
I would imagine it is.
I know, right? And Jake's up there as well. Bonnie Scott says, greetings. James Fry, hello all. We got Krista Avery, ODFL. Continues to be an elite platinum LTL provider. They are proof that LTL can be profitable and done with pride.
Yeah, absolutely.
Can't disagree with that
No.
at all, can you? And
No.
Kelly Mansfield, wow, and that doesn't even include ICs. Not sure about that. I think I missed part of the LinkedIn conversation.
You may have.
I may have, which has been known to happen.
It's possible. But and you know, what Andrew was just covering, Amazon, unbelievable, right?
Mm-hmm.
What they're doing there. But you know, Amazon Logistics and building that out, a behemoth. When do they start hauling everybody else's goods?
That's what everyone's asking right now, isn't it?
I don't think it'll be long.
I think that's a question that the market is definitely asking all of us. But let's check out and see how cold it is in Michigan and what weather is going off on the rest of the country with Nick Austin.
Hey, thanks guys. It is definitely cold up in Michigan. It's going to get even colder. Later in the show, we're going to talk about a deep freeze, which is going to include Michigan, parts of the Great Lakes. But right now we're dealing with another blizzard. It's not in the Northeast like the one earlier this week, but it's moving through the Midwest and the Great Lakes states. So let's get right to that and SONAR critical events. and we can see the heavy snowfall here across the area. And we're going to see at least parts of northern Wisconsin. Sorry about that. There we go. Northern Wisconsin, parts of the UP and Michigan are going to see up to about a foot of snow through tonight, and with some lingering snow showers up there tomorrow, lake effect snow. But it's spreading all the way down into eastern Kansas, maybe just a couple inches down there. It's starting to spread across Wisconsin, Illinois as well, and over towards Michigan as we go through the rest of the day. So we're talking about areas like Chicago, Detroit, Cleveland, Des Moines. All of these areas, we're going to continue to see that snowfall for today. The winds are really picking up too. Des Moines recorded a gust of about 40 miles an hour earlier today, down toward, and other areas reporting 50-mile-an-hour gusts. So drivers are going to hit a lot of areas of low visibility and whiteout conditions. The good news is that compared to the storm that hit the Northeast earlier this week, this is going to be kind of a quick hitter. It's going to be in and out of here by the end of tonight. And as it moves into the Northeast later tonight and Friday, it's not going to be as bad as the storm earlier this week there. We're talking about, some snow, but also a lot more areas of rain along the I-95 corridor tomorrow, as opposed to heavy snow, which is good because some folks in the Northeast are still kind of digging out. So those areas that are getting hit by the blizzard in the Midwest right now, those areas plus many other neighboring states up towards the plains are going to see a deep freeze with a huge Arctic blast of cold air coming this weekend and lasting into next week. Dangerously cold wind chills as well. So we'll talk more about that later on in the show, as well as an article that's up on FreightWaves.com right now about a trucker who was named a highway angel for helping a family during a storm when they got into an accident. So we'll have more on that coming up later on.
Thank you very much, Nick. It seemed like the 50-mile-an-hour winds were hitting Nick's maps during this session.
Yeah. When you started mentioning the gusts, there was great effects, Nick. I like the way you pulled that off.
I know.
Deep freeze, huh?
Deep freeze.
I'm glad I moved away from
it is February in most of the country. I think Rhonda says it's 81 degrees out in the Phoenix area. So
yeah, she just likes to brag about that.
She does.
Kind of thing.
It's like every day. It's like, it's 75, it's 80. Yeah. Everyone else is freezing.
Yeah.
You have Michigan up there where everyone's bundled up and blizzards in other parts of the country.
Yeah, she's down there in the warm weather eating her pineapple on pizza and doing her yoga and that type of stuff. And she loves that segment, so she can make fun of the rest of us.
Yeah, she does, definitely. Well, let's see how the weather may be or may not be affecting the freight markets throughout the country. See if those are heating up right now with Zach Strickland.
Yeah, Kevin. So that winter storm that came through that Nick mentioned earlier in the week has still left kind of its footprint on the trucking capacity in the Northeast specifically, as rejection rates out of the Elizabeth market jumped up again all the way from 19 to 22.7% in the past 2 days. So it's kind of counterintuitive thinking that, okay, capacity tightens after the system. Well, if you think about a carrier's operation, if there were delays getting stuff delivered, getting stuff shipped, that disrupts their whole flow of the week. So, if they're having trouble covering the loads that they were supposed to deliver on Monday and Tuesday when the storm was really hitting its hardest up there in the Northeast, that means they're now going to have to readjust their schedules for the rest of the week. So now we're seeing a lot of these rejection rates jump up in some of these markets like Baltimore, Elizabeth, Boston had a pretty big spike as well. So all along the coast there, the areas that you would anticipate seeing some of the biggest rejection jumps were there for sure. But also, a little bit further to the west, the Midwestern rejections also took a big jump here over the last few days as well. So, if you think about it, the carriers don't just sit in one spot. Not that I am anticipating that this is really a problem, the Northeastern storm really disrupting the Midwest in the same way that it's disrupting the Northeast, but it does probably have some sort of spillover effect as a lot of those lanes, heavy Chicago to Elizabeth and back and forth right there are definitely impacted when things happen in either of those areas. And of course, watching the weather over the winter, in the tighter markets, the weather systems do have a little bit more of an exaggerated impact on capacity as the markets are already extremely tight. Capacity's consistently unavailable already, so any disruption whatsoever tends to have a pretty big impact.
Yeah, it's like that super saturated atmosphere, and just a piece of energy, right, can ripple through there, and you can see it affect really quickly. The domino effect is something that we're going to see quite a bit of, and you're seeing it right a little bit in Los Angeles. You're seeing the rejections as they're starting to rise as well, but that's not weather related, is it, Zach? That's more well, it could be coming back from those markets that were disrupted with the weather, I suppose.
No, probably not. We talked about this on Tuesday. Los Angeles rejections were already jumping up. Now, it could have been that system, that did hit the East Coast, did produce a lot of flooding rains, and on the West Coast there a few days prior. Pretty significant snowfall dump up there around Donner Pass and all across the Sierras and whatnot. But I think that's really just more of a network imbalance issue at this point, even though the weather does have some role to play in all this by creating more imbalance. I think that was already a trend that we were watching form early on. We're not seeing significant demand spikes on any level so far either. So that's what makes me think this is more of a, just carriers are struggling to cover certain parts of the country. And anytime you have any kind of delays or traffic or road impacts, that just makes things a little bit more tenuous, in this type of market.
When we look at the refrigerator market specifically, what's going on in that?
Yeah, so rejection rates actually jumped in all three modes here over the last few days. Now, a lot of that has to do with the northeastern storm and some of the weather impacts across the Midwest, but specifically in Kansas City, Missouri, and there around Little Rock and whatnot, that Midwestern core of reefer activity has been significantly impacted here over the past few days. Rejection rates jumping from about 40 to 42% overall nationally. The first significant increase in the reefer rejection rates since probably December, right when we were climbing that peak towards that Christmas peak holiday level. So it is interesting to see the reefer activity start to tighten up here in the colder winter weather. Of course, temperature controlled means that it needs to be heated as well as cooled. So that could also be playing a role here as some of these temperatures are forecast to drop pretty rapidly across the Midwest here over the next few days.
Thank you for those market insights on the domestic freight market, Zach. Yeah. Very interesting, as always. Just
well,
this market is just really interesting.
Yeah, it is, and the big takeaway from that, in my opinion, is really you've got to stay on top of the daily data, and you need to know what's going on, because it's kind of hovering in this area where anything can make it go haywire, and yes, the volatility can happen in a flash. Outbound tender volumes in the Inland Empire are going up, and rejections are going up, and that can have tremendous domino effects in other markets as well. So you got to keep an eye on this stuff.
You definitely do. And it's Thursday, so we have initial jobless claims. Those are trending in a positive direction, and here's our lead economist, Anthony Smith, to discuss those.
Hey, Kevin. Hey, Michael. So exactly right. We have initial jobs claims, and we have an additional report. We have the Adp Employment Report that got put out for January. And so this is, of course, they're going to have some not conflicting, but differing views, and because they have different scopes that they cover. But good news on both sides. We saw that there were just over 170,000, I think it was 174,000 jobs added over the most recent month for January. Big bulk of those jobs are going to come from the service sector. I believe it's somewhere around the 150,000 mark. We did see additional bump up in the goods side for construction, some for manufacturing, around 1,000 or so. But good news overall, comparatively to the last report, which showed, I think, somewhere around a 50,000 plus contraction for December.
Yeah, so that's a good trend, going in the right way. Let's talk about home sales. Existing home sales and new home sales as well. And what's kind of going on with that, Anthony?
Definitely. So with the housing construction, both are tight markets. When we're looking at existing home sales, that's tight inventory levels, pushing up pricing. When we're looking at new home sales, that's an area that's going to be really constricted by available lots, of course. And when we're looking at the lumber prices right now, building materials, both of those areas are really putting an impact on overall pricing for homes. We're looking at housing starts. We're still seeing record levels, and are going to expect to see record levels throughout at least the first half. But with existing home sales, though that tight inventory, especially for entry-level and mid-level homes, are going to be putting more pressure on the housing market and pricing, and it's going to make those new homes a little bit more appealing. But the thing is, with those new homes, we're also going to see those increased lumber prices really impact the overall price point. So definitely seeing some upward momentum for pressure on pricing. Definitely going to see, I think, a lot more homes being built within the southern and Midwest regions as individuals look to leave, those metropolitan areas like Los Angeles, California, or New York City, New York, and things like that to get more into those easier cost of living and higher quality of life for many individuals throughout the country. Going to kind of retreat from those areas as they kind of adapt to that work remote lifestyle.
Yeah, thank you, Anthony. I spaced out there for a second, and I skipped over to another topic, and I totally forgot that tomorrow the monthly jobs reports comes out, and just wanted to get your thoughts and maybe predictions on that.
Definitely. So the monthly jobs report, what we saw most recently that just came out for January, definitely showed a positive trend. What we have for initial jobs claims, we see that it came down to 779,000 initial claims, which is still incredibly high compared to pre-COVID levels, but is now at a 2-month low. So it's, as you would say, just less bad, but still horrific overall. So I'm expecting to see some positive movements for that jobs report and the reports coming forward, but still nothing substantial. I think we're still going to have to wait till we see what kind of impact we have from COVID vaccine really making impact on the workplace environment.
Yeah, there's a lot of things at play, Anthony. What's your take? Are you bullish on moving into the spring here? It would seem that we probably would be, with vaccine so far showing some very, very positive momentum and people being confident in it, and it's obviously working. We got initial cases coming down. You've got the Democrats pushing through a stimulus package, it looks like, trying to get a third check out to maybe fewer people, but still a significant portion of the population. So I would think things look pretty positive moving into the rest of the winter and into the spring.
Definitely, I'm really optimistic about mid-2021. I think that's definitely where we're going to hit a potential sweet spot when we're looking at consumer sentiments, outlook. We're looking at employment trends. I think that's really going to be where we start to see a return to somewhat normalcy as we get more and more individuals vaccinated, those initial claims for jobs, but those initial cases as well coming down. So those are going to be impactful trends to watch. Again, we still have well into the millions of continued claims coming in on a week-to-week basis. So we are going to need to see some type of stimulus, as you mentioned, come through for individuals that are not allowed to go back to work and have not been able to successfully adapt to that work remotely lifestyle.
Yeah, there's a problem with people who can't work remotely. Certainly. So, Anthony, you and Zach do Freightonomics, and if you haven't watched Freightonomics, definitely watch it. You can watch it on tv.freightwaves.com on demand, or you can download it in podcast form on Freightcast or through Freightonomics, wherever you download your podcasts. You guys did an episode yesterday. Can you give us a recap on that?
Definitely. So, as you mentioned, we have our Freightonomics podcast once a week. And the big thing, Zach had a great idea, was called the data dump. And I think it's very meaningful now because we're looking at what data means. I think now we're looking at the times of COVID-19, everyone is obsessed with the latest data that's put out. The other thing that you really have to be mindful of when you're looking at the latest data is that one data point does not dictate an entire trend. And so I think that's really going to be the big takeaway for that most recent episode. And I think the big takeaway for anyone looking at the most recent data points that are online right now, or if you're looking at headlines, or if you're looking at your favorite blog or anything like that, there's going to be a lot of data. And knowing how to interpret that data, knowing that when 1 month comes out, that's not going to dictate an entire trend. You have to look at where the overall movement's going and what it's exactly trying to measure. Because sometimes we try to measure, inappropriate industries with the wrong measuring tool. So knowing what you're looking at, how to look at it, and how to interpret it really was a focal point for that episode of Freightonomics.
And that's why economists are the masters of the universe.
And they are.
Anthony Smith, right?
Okay, very good.
Right. Thank you very much for your time today, Anthony. So yeah, let's let's pivot over to freight brokerages, 3PLs, and talk with the recently new president and CEO of the TIA, Transportation Intermediaries Association, Anne Reinke. How are you doing today, Anne?
Hey, I'm great. How are y'all doing?
We're doing fantastic here. We are
Last
doing
time I saw you were sitting in front of a dishwasher in your kitchen, so I'm glad to see you're back in the studio.
I am too. It feels so good to be back in the studio. We did our conference call there, and we've done a few episodes of Midday Market Update from that position in your attic?
Yeah,
Michael
absolutely.
Vincent,
Well,
right?
yeah, my music room, but yeah, unbelievable.
So
It is good
Anne,
to
you
be back.
joined TIA in mid-October, and you're
Right.
getting settled in right now. How's the journey going so far?
Well, it is terrific. So I don't know if you know this. I came from the U.S. Department of Transportation. I was there for a year and a half. And so that's a political hotbed. And I was just delighted to be out of a political hotbed and working for a group of people who are just pragmatic members who want to have solutions for their customers and trying to advocate on their behalf. What a relief that is. So I've enjoyed it tremendously.
So for our viewers out there who aren't familiar with the TIA, we have a lot of freight brokerages and 3PLs as the audience, but we also have other people in logistics and supply chain. Can you give us a brief overview of what the TIA does?
Sure. So we do a number of things. We represent the third party broker and logistics industry, and they have, different commodities. There's different carriers they use. There's different modes that they use. So we represent the sort of the full scope of those industries. And basically what we do is provide an intermediary between the carrier and the freight. And so, sometimes we're referenced as the travel agents of freight, if you will. Um, the association wants to represent them as adeptly as we can in a variety of ways. One is to make sure that they are the most ethical brokers in the industry. So we have the TIA bond, as you know.
Mm-hmm.
Second is to educate them. So not just introductory education like the new broker success package. If you're just entering the industry, how do you actually get successful? How do you grow your business? How do you attract new customers? But also continuing education. So we have the certified transportation broker course, which is for those kind of lifetime learners who are listening, who are essentially looking to improve their value at their current job. And then we provide, now COVID aside, we provide networking opportunities where we can really learn from each other and follow best practices, try to establish relationships where you can learn from your peers and how they've improved their businesses over time. Our conferences in years past have been so widely attended. We're a touchy-feely association. We really like being with each other. It's killing us that we have to be virtual so much. We're looking forward to the vaccine distribution and rollout so we can be back together. I read a review of a book. I haven't read the book yet. So I read the review of the book where it's called We've Got to Be Together or something like that, where it says we are depleting our social capital as a nation because we're not sort of afforded an opportunity to be together. So we want to build up that social capital when it's safe to do so.
Excellent. Thank you for that. And so you came in mid-October of 2020. So how's it been settling into the TIA?
Well, so we had, there are a few things that we have to do that were kind of apparent to me. And one of them was we really wanted to have a trust culture where we could, understand that I'm part of a team, that we are a team together, that we protect each other. If you've ever read Simon Sinek, there's a whole long book about leaders eat last, where we really want to make sure that we feel protected as a team, that we feel that we have the opportunity to speak honestly, truthfully, and innovatively. So that was kind of my first MO, is to how do we make sure that our culture is in the right place. The second thing is that we are ever mindful of COVID and the impacts on revenue. And so we're trying to be as innovative as we can and creative as we can to show investment and engagement to our membership, that they can get a return on their membership, but also meaning we have to do some cost containment and things like that. So these aren't necessarily the showy, pretty things, but these are the critical things, because once we build up our house, I think then we can start fanning outwards and getting more expansive and really attracting more of the brokers who are in the space who are not yet members of TIA for reasons that we want to find out and make sure that we can get more of them to join the association.
That sounds fantastic. And so another part of the TIA is working with the government, working with regulatory agencies, with new administrations, and we have a new administration as of January 20th. So I was just wondering what was on the agenda for 2021 when it comes to public policy.
Sure. So a couple of things. We have a great Vice President, Chris Burrows, who represents us very ably. And one thing I should tell you, and it's funny because just before I got on with you, I was on the phone with a government lawyer to make sure I'm meeting all my ethical obligations. So that I have a year cooling off period, so I can't actually interact with the Secretary of Transportation yet. I'll look forward to it and doing it in a year. But our Vice President of Government Affairs has a meeting set up next week to meet with those folks at FMCSA. And also, we're meeting with new members of Congress to talk about a couple of things. One is the motor carrier safety selection standard, so that there can be a uniform standard that everyone understands that when you're selecting a carrier, there are certain measurements that have to be met, certain requirements that have to be met. There's a lot of bipartisan support for that. And second of all, resuscitating an Obama-era rule, which would, when you're developing this motor carrier safety standard, using data to frame it as opposed to using a physical audit, which is what FMCSA has had to do in the past. And, in this time of COVID, we understand there's not enough manpower. We want to make sure everyone's safe. So those are the kind of two things that we'll be working on.
That's a very interesting point, though, the FMCSA in safety and vetting. We've been covering nuclear verdicts here at FreightWaves. We've done, my group's done some research projects on that, and there seems to be a lot of precedence for if you are a motor carrier and kind of the legal system on that end. But for brokers or intermediaries, it's the precedent really isn't there. So I'm sure that's something that's on quite a few members' minds right now.
Yeah, and our concern is that because there isn't a national or uniform standard, that brokers sometimes get thrown into litigation, negligent selection, for example. And, none of our brokers are trying to get out of some kind of ethical, legal, or obligation. But I think because there is confusion in this space, we want to straighten that out. We don't think it's to anyone's benefit to not have there be an appreciable understanding that everyone gets about how you make those choices.
That is a tough spot for brokerages because there is not a right way to do it. So no matter what you do, you are susceptible to legal action and being dragged into lawsuits, even if you do it very diligently.
Oh yeah.
It's
You've
still
got to be very, very
defense
careful.
lawyers can poke holes into any system or process that you use right now. And you see that in court cases around the country.
That's exactly right. And so FMCSA does get just a wealth of data, but they haven't synthesized it yet in such a way that there's this standard set. So why not use the data, get everyone, carriers, brokers, everyone to agree as to what that is. And then from there, we will, that will take care of, I think, a huge concern for us because it can be a bet the company risk for some of our smaller brokers.
Yeah, it definitely can.
Yeah, absolutely. And I mean, in my days in brokerage, I was always concerned about the litigation, making sure that things were tight and trying to vet everybody that we used, every vendor that we used, et cetera, because it's a very tricky little tightrope to walk. But Anne, I want to ask you a question about last year, and last year we're coming up on the time when last year we started to see this kind of rift between drivers and carriers and the brokers, right? Where they were, we want to have a floor on pricing, et cetera, but no ceiling, et cetera. There's a big debate that was going on, right? And it got pretty heated and looking for some, trying to get legislation through, I guess, was initial stages anyways. Is that something that's on your radar to handle in the future and try and handle a little bit? What was the issue there? Is it communication on how things actually work? Because I've been on both sides and I understand that You know, at
Supply and
times the
demand.
dumbest person in the room sets the price, right? And it's, I mean, not to call anybody dumb, but there's nothing really nefarious going on here, although either side can try and claim that at times, right?
Yeah, certainly not. I think, and this was before I got here, but it seems like it was a breakdown, to your point, in communication and a breakdown in trust, and amplified, exponentially because of a shock to the marketplace in COVID. I mean, we all have seen the data from February, March, April, where the market just went like that. And we were all affected. The brokers were too. And unfortunately, then it just resulted in finger pointing instead of solution solving and trying to figure out how we can actually make it work together. Now, no one's complaining now because, as you know, the market is shot through the roof again and everyone's doing fine. I think, I have met with OIDA. I think we want to meet quarterly. Those are the owner operators.
Mhm.
We want to meet with them quarterly. We want to make sure there is this dialogue. I don't think that the issue that they seem to think was occurring. We were not trying to profit off of anyone's backs. We were struggling just as much as the drivers were. So hopefully we can reach that point where we're trusting each other again.
Yeah, I think a lot of people lost sight of the fact that this time last year, before COVID hit and everything, was not the best time in the world to be a broker.
No, it was not. It was
a
2019
fairly
into 2020.
difficult. Yeah.
Early 2020 was a
fairly
rough time
difficult.
for everyone, really.
Yeah.
Capacity was so loose. So, Anne, I have to ask you. 2020 was COVID. Live events went by the wayside, and your event, TIA's event's a big part of the TIA. What are the plans in 2021?
So we just announced that we're having our annual meeting virtually. This was supposed to be our first in-person event in May. So it's May 11th through 13th. And again, we're really trying to show value for our members because I know, I get it. Everyone's multitasking. They're not giving up their day jobs like they would if they're going to an in-person event, but there still will be value. We're not going to have it all day. We're going to curtail it so that it's just certain hours of the day to be responsive to that. Hopefully, though, we will have our annual policy fly-in person in September and our Technovations or 3PL Extend, if you want to call it that, in October in person in San Antonio, both of which would have a hybrid option, though.
Okay. Yeah. So the May
Excellent.
conference is going to be virtual. Okay. And you guys have been doing a lot of virtual things over the last year, a lot of lunch and learns and Ask the Experts. I think our own Donnie Gilbert is on one coming up.
You can't hide talent. You can't hide talent. So when you got it, you got to flaunt it.
That's right. That's absolutely right.
So, but the TIA conferences are always enjoyable. I always have a great time. I've met a lot of people, a lot of great connections at that spring conference, this Capital Ideas Conference. So thank you very much for joining us today, Anne. How does our audience reach out and learn more about the TIA and contact you?
Sure. So TIAnet.org is our website, and I am Reinke at TIAnet.org. Happy to hear from anyone. So I appreciate your time. Thanks, guys.
Thanks,
Thank you, Anne. Thank you. Pleasure.
Awesome.
That was good. Yeah. Yeah. So let's move on over to the ag market, bulk loads, dry bulks, and talk to the master of bulk loads himself, Jared Flynn.
Hey guys, thanks for having me back.
the master of bulk loads.
The master of bulk loads, man. He runs the biggest load board for those ag haulers, those dry bulk, liquid bulk, those pneumatics that you can never find if you want one. I've spent many afternoons looking for a pneumatic.
When you want one?
They never are. They never are, especially same day.
You
how
must not have known Jared. That's the problem.
Well, I know. How's everything going with you, Jared?
It's been real good, guys. It's hopefully we'll talk about this, but the grain market's just been on fire over the past couple of months. So we've been just seeing crazy amounts of movement in the grain industry, and when there's movement in the grain industry, it's putting truck demand on its highest. So it's been really good. Farmers, we always say this, like they have one good year out of every 4 or 5 years, and this is that good year that we've had. We've had again record harvests coupled with record prices. We've had last week one of the highest export days in the history. The U.S. in one day did a sale for 1.2 million metric tons of corn to China. So it's the largest record sale to date, which, if you look at it, I mean, put it in simple terms, I mean, that's over 92,000 truckloads of grain in one day, or 400 train loads in one day sale to China. And just the week prior for that, it was 1.7 million metric tons. So right now, the U.S. is just on fire exporting grain.
92,000 truckloads, you said? Is that right?
Yeah, you just put it into kind of easy math. Yeah, I mean, most.
Yeah, that's very cool.
Are all, 20, 23 metric tons or 25 regular tons per load. So, I mean, it's a crazy amount. But yeah, and you'll see that with grain, most of that's going to move to the nearest train loader that's going to move it out to the export markets to load it up on vessels. So, but yeah, it's created most of these carriers that we're talking to, trucking companies. Man, these guys they've been busy for the past couple months, and they haven't put the pedal off the metal.
Yeah, I just want to make sure I have it right. My wife is from here in Chattanooga. I'm from Ohio, and first time I took her up there driving just up towards Columbus, she's like, "Do we eat all this corn?" I said, "There's a few more. There's a few more states to the left of us of corn as well." It's amazing. So the record crop season is that having any repercussions or anything like that? I mean, it's all moving soon, and everything. We're talking to many people in the kind of a war of words, if you will, as Kevin and I were talking about the ag exports off the West Coast, claiming that they're being left behind or slowed down, that type of stuff. That doesn't involve what you're in, does it?
No, we're not seeing that. I mean, the farmer's been rewarded really well. Most reports are showing that the farmer right now, they've sold almost 75% of the crop. So most of these farmers, once they harvest it, depending on the prices, they'll try to carry it as long as possible. But what we're seeing right now, the market's inverted. So it's telling the farmer, hey, you're going to get the highest prices now in the industry. So most of these guys are selling everything that they got.
So when the grain market's hot, the ag market's hot, you got 92,000 truckloads going. That must put pressure on dry vans, reefers, flatbeds, because if it's hot, you're going to switch out your dry van for a hopper, right?
Yeah, no, that's exactly right. And honestly, a lot of these, what we've seen over the years, most of your drivers, if they're doing hopper freight and even van reefer freight, most of them love the hopper freight for a number of reasons. Number one, it's going to be more local. It's going to be as long distance, so those guys can get home more frequently during the week. Number two, they're dealing kind of more in rural markets. So a lot of these guys kind of like that over, more urban cities, drop-offs, bigger loading docks, warehouses, stuff like that. And then number three, usually, your hopper freight, loading, unloading is going to be a lot quicker, simpler than obviously going into a big facility. So yeah, if the prices are good or even close, they're going to switch to the hopper opposed to running van, flatbed reefer freight.
It's interesting. It's kind of a seasonal type of thing, right? You drive, and when you do your regular truckload, and then when ag picks up, if you got those connections, you jump to that money and the easier routes. That's very interesting. What's 2021 look like, Jared? What's the sentiment moving forward?
Yeah, we're really kind of we're sitting back right now because we've seen it on fire here the past couple months. And, none of us have a crystal ball, but we're seeing with all this massive selling and movement right now, we're going to hit this cliff probably by April, May, because the farmer's going to be sold out. There's not going to be anything else to move. I mean, they're letting all this go. We're probably going to see demand on trucking really cut back a little bit. And typically we see that anyways, more in your spring months. Most of your farmers, they're back to doing field work, planting, putting fertilizer down and stuff like that. But this year, usually, again, they try to carry out through the market, just to be rewarded to carry that grain and get higher prices. But the market's telling them to sell right now. So we're probably going to see this thing probably really slow down in the next couple of months just because of all this stuff moving right now.
Yeah, I would imagine so. Yeah, so let's talk about bulkloads.com a little bit. You guys have been expanding your services, launching new products. Can you go in that a little bit?
Oh, yeah.
Yeah. Thanks for bringing that up. Yeah, again, last year we pushed out our TMS. It's going really well. Really, we're on pace this year and just like everyone is setting up these integrations. But we're working with a lot of big ag companies, integrating directly into a lot of their systems, accounting systems, software systems, really trying to just make it easier on all players in the industry, but especially a lot of these in our industry. It's a lot of these commercial merchandisers that are handling the truck freight. So we want to make it easy. We want to be able to flow loads from their software systems right into bulk loads, but then also feed those tickets that those truck drivers are getting right back into their software system. So yeah, our play this year is really, really working with a lot of our partners, customers, just to really close that loop and create those efficiencies.
It's fantastic. Well, thank you very much for joining us today. We'll have you on very soon again, Jared. How does our audience reach out and learn more about your products and services and bookloads.com, and how to source those pneumatics that I can never find? I'm glad you brought that up. Like I said, some of those are so specialized and it just depends on when the market's hot. and we do have pneumatics. But yeah, just simple. Go over to our website, bulkloads.com. We have an easy sign-up form. We even have a form if you just want to get more information, talk to one of our representatives. We'd love to get you on there. Yeah, and if you're for listeners out there that maybe want to look more into the bulk market, man, there's tons of opportunities out there, literally. So yeah, if you see some opportunities, if you're freight brokerage, if you guys are doing a lot of dry van reefer, but you have that customer that does do a little bit of bulk, man, find us. We'd love to talk to you and show you what we can do. Thank you very much, Jared.
Excellent stuff. Thank you, Jared.
Thanks, guys. It is a classic web chat forum that he has on Bookloads. We used to subscribe whenever my last brokerage job.
Yeah.
And entertaining.
Yeah.
You had great arguments on there. It is entertaining, definitely.
Jared's awesome. I love what they do out there, and it's good to check in with that market. It's a totally different beast that people don't think about.
It is. It is a completely different beast. Let's check in on the weather once more with Nick Austin.
Thanks, guys. We have a beast of a storm, you might say, moving through the Midwest right now. A blizzard that's not going to be as bad as the one that hit the Northeast earlier this week, but certainly it's going to be rough from Minneapolis down to Chicago, into Iowa, and then all the way into really parts of western New York through tonight and even into parts of tomorrow. So you see it here on the critical events map, a lot of that dark blue, that heavy snow. But luckily, it'll be winding down for most areas late tonight, and blowing snow and a lot of limited visibility too. So pretty rough stuff there, but again, a pretty quick hitting storm. But this region here, that's shaded in purple here, this is a huge area that's going to see likely record cold weather for some areas beginning tomorrow and then lasting all the way into early next week from Montana and Wyoming all the way over through the Great Lakes into western New York. Low temperatures are going to be 10 to 20 degrees below normal. And in a lot of areas, even daytime high temperatures will still be sub-zero for several days. So it's going to be a pretty big Arctic outbreak here. We're talking about, in some areas, temperatures getting as cold as 25, 30 degrees below zero with wind chills of 30 to 50 below zero. So it's going to be absolutely brutal out there. It's going to be really important for drivers to make sure they have that additive in their diesel to make sure that they don't get problems with fuel gelling. It's going to be, that could be a big issue. And also for flatbed drivers who spend time outside of their trucks strapping and tarping down loads, just dress in layers, dress really, really warmly, and do everything you can do to just avoid that frostbite, because with temperatures and wind chills like that, the frostbite can set in really quickly. So this is going to include places like Chicago and Milwaukee that are going to get some of that heavy snow today, all the way over into the northern plains and even into southern Canada. So it's over a very, very broad area. Now, earlier I mentioned that there's a new article up on FreightWaves.com, which is about a trucker. His name is Demetrius Fields, and he drives for Hirschbach Motor Lines. And he was recently awarded as a Highway Angel for helping rescue a family along with another trucker from a different company. They pulled a family out of a car after a spin out during a winter storm. They got in a wreck, and so they helped out that family, and he was deservedly rewarded for that. So you can read all the details on that on FreightWaves.com. You can also follow me on Twitter @FreightWeather. There's always links to the stories there, as well as weather updates throughout the day. So check that out.
Thank you very much. Let's talk about the most dangerous interstates. What's your latest article on that?
This is part 4. We've been counting them down, the top 5 all week. So this one talks about I-95. That is also up on FreightWaves.com right now. I-95, of course, a big one. I mean, it's a huge interstate. There's always a lot of traffic on it. So, based on certain sets of accident statistics, some of them dealing with rain and snow as well, it's number 2 on the list as far as the most dangerous for truckers out there. So go check that out. Tomorrow we will reveal the number 1 most dangerous interstate for truckers here in the U.S. That'll be going up late tomorrow morning on the website.
Thank you very much for that update, Nick.
You bet.
Cold, cold, cold.
I wonder what part of I-95.
There's certain
fairly
parts,
long road.
It's fairly long, but there's certain parts that are very dangerous, very congested and traffic.
Yeah.
So, let's talk about tomorrow and what the truck and what you and Dooner have in store for us.
Oh, tomorrow's going to be great. We got to talk about yesterday's as well. But tomorrow we got Kevin Schultz, who's co-founder and president at the 357 company, which it's not the steak sauce.
The 357 or the gun, I guess. 357 Magnum.
Yeah, that too. Okay. The 357 company, Hemp Logistics. Which is it's going to be a great show. We got Tyson Lawrence, president and CEO at Tactic Logistics Group. He's going to be talking about his own comeback story. So we got Hemp Logistics, Tyson Lawrence talking about his comeback story. Joe Mahoney at sales development lead at HYCU Incorporated, and then we got our first ever Mark Dalla Vicenza, sales director at Portage Transport. He's going to do a cook it forward. Instead of a play it forward, he's going to do a cook it forward tomorrow. And I'm really hoping it's pineapples on pizza.
I do too. Pineapples on pizza would make a great segment.
So if you're listening, Mark Dalla Vicenza, we got 2 orders of pineapples on pizza. We'd love to have that. But yesterday was a really, really good show. I don't know if you caught it yesterday, but it was Dooner said at one point it felt like he was in church, and it was really good. We had Pierre Laguerre, right, from Fleeting, who was on, talking about him coming on. Well, not only what he's doing in his company, where there was tremendous, but he came from his growing up in the business came from Haiti, and then wound up in New York in some gang and violence areas and drug and that type of stuff. But now he's CEO of a tremendous company there in Brooklyn and moving it forward. Hope Zvara, who is the Mother Trucker Pain Relief Cream woman, and Mother Trucker Yoga, she was awesome talking with her. Britton Wesson, market development at JB Hunt, playing us some hymns. So we had the hymns come out there, and we had Marcus Cooksey talking about his comeback story, if you will, at Duke AI. Really, really tremendous show yesterday, and you can catch all those things obviously FreightWaves.com.
Definitely can. And we have our next virtual summit coming up on Wednesday. It'll be the Healthcare and Pharma Summit. We have the vaccine rolling out, and if you just take normal pharma and healthcare and the supply chain and logistics involved in that, it is very complicated. And we have some great segments on visibility and kind of the organizations of that supply chain and all the challenges and hurdles that you have to go through, from quality standards to on time,
That's
next Wednesday. Value.
That's next Wednesday.
It is Wednesday. Yeah.
And one of the things I learned, I mean, obviously it's great timing for health and pharma, right?
It is.
in logistics. But one of the things that I learned earlier, and real quick, was just that the testing for the vaccines, it involves the logistics.
Yes.
Right? They have to move the stuff around and prove that it can be transported and stuff like that. So it was a very interesting thing. I never thought about that. Because,
quality control.
Does it work or not? But no, quality control and the logistics, can it be moved, is huge in approving a vaccine.
It is. And then February 22nd to March 3rd, 8 days, the Global Supply Chain Week, the biggest and the best virtual event out there. So each day is dedicated to a different section. We have aerospace and defense on Monday. And then Tuesday we have manufacturing and we have
Monday's air cargo and ocean logistics.
Yes.
Right. Tuesday is geopolitical challenges and aerospace military. Yeah, which is going to be really cool. That's another thing that people don't think about quite a bit. It's really going to be an interesting day for me. I love that part of it, the geopolitical climates and what it can do to the supply chains. Right. You've got to be watching so much more than is there a truck outside. Right.
It's very much so.
Yeah.
So and you can catch all of this, you can go look at the agenda on live.freightwaves.com. And if you're interested in participating, either sponsoring or as a speaker, reach out to me, khill@freightwaves.com.